The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when lone fishermen in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 25th fantastic Friday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today, folks. And my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool I call Ask Not What You Can Expect from Life. Ask what life expects from you. You know, questions control our focus. So what are you going to get out of life? What is it that you want out of life? What I'd like to do today is give you what I'll call the code of ethics. If you can live by this code of ethics, folks, you'll get everything it is that you want. You'll receive all of your dreams. So the code of ethics begins like this. To bring blessings upon yourself, bless your neighbor. To enrich yourself, enrich your neighbor. Honor your neighbor, and the world will honor you. To sorely hurt yourself, well then, you have to hurt your neighbor. But he or she who seeks love will find it by giving it. The measure of a person's wealth is the measure of the wealth that person gives. To enrich yourself with many friends, enrich your friends with yourself. That which you take away from any person, the world will take away from you. When you take the first step to give yourself to that which you want, it'll also take the first step to give itself to you. Almost sounds like a little poem, but these are the code of ethics. Peace and happiness do not come to you from your horizon. They spread from you out to the infinity beyond your horizon. The whole universe is a mirror, folks, which reflects back to you that which you reflect into it. Love is like unto the ascent of a mountain. It comes ever nearer to you as you go ever near to it. So let's go take a look at these mountains here in the markets. We're going to start off taking a look at the ES Mini. In fact, we're going to go ahead and pick up from yesterday's show. If you didn't catch yesterday's show, you can always catch that archive on Channel 9 on TigerTV. If you're watching, if you're listening on the radio or maybe your mobile device, you can always catch this show streaming live to you. Just go to the homepage of TFNN.com. Over on the right-hand side, you'll see three little cell phones. Go ahead and click on that button, and you'll be able to see this show streaming live. You'll see the charts that we're taking a look at, and we're just simply – now, the futures are up this morning. Clearly, you've got the Dow futures are up about 23, says that right now if they were to open, you'd see the Dow index up about 40 points or so. ES Mini, which is what we're going to start with, is trading out at 1494. That's up 3 points. NASDAQ futures up 8 points right now. Russell up as well. But we're going to start off taking a look at the S&P 500. Now, yesterday in doing the shows from 9 to 11, As we came into the 10 o'clock hour, one of the things we're noticing, if you're watching on the charts that we're taking a look at, we saw the ES Mini, move up to a price point of about $14.97. We saw it also move into where? We saw it also move into the overbought condition, just simply utilizing one simple indicator, that relative strength, which I'll also call relative weakness index out there. And we watched what happened was, and what I said was, and what always has to happen when a market, no matter what it is that you're trading, gets into either overbought or oversold condition, it has to work its way up. And it can do that by either moving sideways or pulling back. Well, actually, coming into the middle of Basil's show yesterday at 11:30, and he'll be on again today, what we had what I love, one of my favorite patterns, which is divergence. I love to see divergence. In this case here, we had price moving higher, we had relative strength moving lower out there, and then we had a couple of candles that formed the bearish reversal signals that we needed to see. Just like on the daily charts as well. We talked yesterday about the abandoned baby top in the NDX, and that absolutely came through, but it was the reversal signals that we were looking for from all of the other indexes, or at least some of them, and we got none yesterday. Why are the markets popping up? Because we didn't get the reversal signals that we were looking for. We're going to take a look at some of the larger patterns out here, but what I want to show you is this. What did the ES Mini do after it completed the pattern, or completed the high at 11:30, and then we got really the signal here at the 11:50 time frame? Now, I'm taking a look at a 10-minute chart, because at this time in the morning, it's much easier to be able to show you charts as they are occurring. Market goes ahead and moves down. In fact, if you're watching on the chart, you'll see right at the 14, so that would be 2:10 in the afternoon, it made a 100% move of a move. That's one way. What's a move of a move? It's simply coming back to a prior set of swing points where you see a significant change in trend. Well, you can certainly see that with the little base that it was building in between the 4 o'clock time frame yesterday and before the market actually went ahead and took off at 9:40 in the morning. What's it do? It comes back, makes a move of a move, gets down to the bottom of the oversold indicator, down towards the 30 level, gets down to 31.94, makes one of these TD combo patterns. That's the number 13 that shows up there. That says that should be pretty good support. And, in fact, it was support as it was tested coming into last evening. Market then goes ahead and moves up, does a retracement. That's why you want to be able to make sure you've got your retracement rulers. Taking a look at 0.382, 0.618, 0.786. What does the market do? Moves up to your first logical place where you're going to see any kind of correction. Sweet 618, the number 1493.50. What does it actually get up to? 1493.75 at 3:40 yesterday afternoon. Why do I bring this up? Because today, at about 8 this morning, 8:10 this morning, in fact, it was 8 a.m. this morning, we got a reversal signal. We see the same type of pattern setting up here. We see divergence with price moving higher. We see divergence with the relative strength getting weaker out here. Does this mean the pattern has to work? Absolutely not. All patterns do not work 100% of the time, but you take all the trades when the universe gives them to you. This trade here, real simple. This trade is real simple because your close is a stop above the 1497.50 level. So where, if the market does pull back and to recharge itself before it takes off to higher price, and yes, I do believe that we will see higher price today, and we'll go take a look at those patterns out there, where would the logical area for price to move to if you're watching on the chart? I'll go ahead and blow it up. That's right. Exactly, 0.618, the 1490.75-ish level out there. And what will give you, if the market does move down there, what will give you the signal, whether that's the stopping point? You got it. A reversal signal, a reversal candle. Candlesticks, folks, they are the message of the markets. The bulls and the bears, they can't hide. They always have to show their hands. They always have to show their hands. You want to be able to learn to identify reversal candlestick signals. You want to make sure that you add that to your arsenal of tools out there, because they will absolutely help you with your trading. Now let's go take a look at some of the larger term charts out here. Let's take a look at the daily charts. And so one of the first ones that pull up on the screen, let's pull up the Dow futures. If we take a look at the Dow futures contract out here, you're taking a look at butterfly patterns. I probably have more. Well, on the Dow, I only have two. We're going to take a look at the first butterfly pattern. The high is the May 1st, 2012 time frame. That high out there in the Dow, 13,284. Makes a low coming down into the June 4th level, down at 11,985. Makes an A to B equals CD, but what it mostly does is it makes a 1.272 butterfly, an expansion from the May 1st high down to the June 4th low. And it completes it right around the September 14th level out there, out at the 13,576, a 1.272 butterfly pattern. Notice what was happening with that indicator, same indicator that we were using on the 10-minute chart, down on the daily chart. Where was that? It was up at the 70.16 level as it made a high out there. Made just a slightly higher high back in October 5th out there. Of course, it was doing that. And what was happening with that relative strength? That's right. It was getting weaker out there. What does the market do? Market goes ahead and corrects. If we take a look at the correction, if we go from the June 4th low all the way up to the October 5th high, where does it correct to? Just below the 0.618 level. Remember, these numbers, 0.618, 0.786, 0.382, they're guidelines. They're not exact. But what they do help you is you understand when the market is pulling back where you're likely to see a reversal area. And until you see the bulls step in and if market pulling down, you don't exit the trade. You may tighten up the stop, but this is how you understand the expectations. So now what do we have out here? Do we have the same? It's actually the same set of candles. If you took a look at the June 4th lows that were out there versus the November 16th set of candles, really the same set of reversal candles out there. So those are also candlestick signals. Does it suggest maybe that what we'll see is we'll go ahead and see another 1.272 butterfly expansion? Makes logical sense to me. Look at the market here. Market in where? It's in that extreme overbought territory out here. So 13,921. Does it have to get up there? Can it actually reverse now? Are we close enough? Yeah, I'd say we're relatively close enough out there, but more likely what we're to see is we're likely to see the completion of this 1.272 butterfly. Does it have to happen today? Absolutely not. Can happen on Monday. We've got a 4 planetary index date coming in on Saturday. We've got a full moon coming in on Sunday. Looks like the markets, the tide is rising, going to rise right up into those. And so 13,920-ish on the YM, on the Dow futures. Looks like the target out there for another 1.272 butterfly. And just like here, before the market went ahead and reversed, if you go back and you take a look at October 8th out there, you got a bearish engulfing candle. You get a reversal sign. You get some follow-through on the next sessions, folks. Want to make sure that you understand those candles because this is how the markets communicate to you on a consistent basis. If you'd like to learn more about those candlestick chart patterns out there, if you'd like to compress decades into days, then go to the homepage at tfnn.com. Go down towards the middle section, click on the Trader's Edge, this show right here. It'll take you to my page. You'll see, scroll down to the bottom. You'll see candlesticks, the silent signals out there. It's an archive workshop. That doesn't mean that you don't have access to me because you absolutely do have access to me. It is one of the things that you absolutely want to make sure that you add to your arsenal out there. So it's a full day session, and what it will do is it'll compress thousands of hours into 6 hours because I teach you only what it is that you absolutely need to know and show you what you don't need to know out there. Right now, we've got popping in the markets here. You've got Tempur-Pedic. TPX is a ticker symbol. They closed at 38.35. They are trading up this morning. Last trade firing off at 43.05. Starbucks also having a good cup of Java in the morning. Closed at 54.57. Trading out at 56.90. Our call-in number, 877-927-6648. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We've got the yen here popping right now, trading out at $90.98. This is the U.S. dollar, Japanese yen currency pair. We're looking at the 30-minute chart on my screen. And what you're also seeing out here are a number of butterfly and Gartley patterns. This is just really going back into the time frame of about 8:30 in the morning back on January 4th. What the U.S. dollar, Japanese yen has completed up here right in this 90.85 level is a 1.272 expansion. This is coming off of the swing point high out here at about 7:30 in the evening on January 20th. Now, what we can do, and this is actually setting up for a great Nadex trade out here, and so the 10 o'clock hour is the Nadex bull-bear binary option hour, and so this is one of the charts that I'm taking a look at to set up a possible trade for us. If this area here fails, meaning that we see the yen move up above the 91.15 level, what the yen will do is move to the 91.47 level. That is the 1.618 expansion of the same set of swing points. What I'm waiting for, this is another, it's also showing another TD combo 13 count right here at the price point of, and what I'm looking for, if the yen were to get below 90.86, that is setting up the short side of the trade. So we can see the short side of the trade, which offers the better reward to risk, I'm sure. So that is taking a look at the Japanese yen. We can see that what it did do here, and this is a 30-minute chart. I'll blow it up. This created what looks like a shooting star candle out here coming into the 8:30 session. The three candle formation here, three river evening star candle as it completed the 9 o'clock session as we came on board with the show. So now let's go ahead. Let's see. Let's go ahead and, sorry about that, let's go back and take a look at the futures contract. So I'm going to show you how these patterns simply are repeating time and time again, and why when we take a look at the ES Mini. The ES Mini right now trading out at $14.95, got up to a high so far of $14.97.75, doing that yesterday. The ES Mini wanting to travel up to about the 1503 level. What's at 1503? Just a bit higher is the 1.272 expansion. We can see here also that the ES Mini getting into that overbought stage. Now let's take this back a little bit. So I'm gonna actually squeeze my chart here. I'm gonna squeeze my chart. And this squeezing of the chart that you're taking a look at, we're going to go take a look at butterfly and Gartley patterns. This takes you all the way back into 2008. So I'm going to blow that up right now. We'll just simply, so it's easy for you to follow on the screen. So do you think patterns repeat themselves? Why is it that maybe we should be looking for a reversal, a correction to occur? Well, if you believe patterns repeat, how about if we just take a look, just like we did in the Dow futures, coming off of in this case here, the March 27th swing point high in the S&P. E-mini, that was at the 13.50 level, makes a low coming into, and you can see was also in the overbought condition. I've got that area highlighted at the bottom of the chart. What's it do? It moves down into the June 4th level. What do you see here? You see a little bit of divergence here in the relative strength index. You absolutely do. You get the candle signals. You get the whole ball of wax here. What does it finally do? Off of the swing points from March 27, 2012, down to the June 4th, 2012 level, makes a 1.272 expansion. Does that coming into when? September 14th out there. Are there reversal signals to indicate that the market is getting ready to move down? Absolutely, at both stages, both at the swing points of March 27th as well as at September 14th. How about we take it back just a tad further here? Oh, that didn't work real well. There we go. Now we're taking a look at another this one here only went to 1.128, close enough to 1.272 for me. This is coming off of May 2nd, 2011, down to the lows. That was the high, down to the lows on October 4th, 2011, going ahead and making a high March 27th. If you take it back a little bit further, you've got this little small 1.272 butterfly after seeing a TD combo 13 count, which I also teach folks how to do it. If you subscribe to my newsletter service, there's there are 32 hours worth of educational sessions that I provide to my clients out there, and one of those sessions talks about and teaches you about the TD combo, the either TD sequential or TD combo out there. But look at that, another butterfly pattern at 1.272. Take a look at this larger one coming off of April of 2010, April 27, 2010. The high out there at 1210, down to the lows in July of 2010 at the 1002 mark. It makes a 1.618. As you look at my screen, it says 1.58. Remember, these are guidelines. These are guidelines. What does it make up at the top there? Makes a 13, TD combo 13, right at the top in February of 2011 before it goes ahead and makes a correction out here. You can see 1.618 butterflies in here back to back. You can see another 1.618 butterfly before you have a correction. And everything that started it off was back in March of 09. And what did it do at the bottom there? That's right. It made a 1.272 butterfly expansion, getting into where? Getting into oversold territory. 877-927-6648. We get back, we're going to go see how these markets are going to pop and whether they're going to retrace a bit before their next pop out there. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 28 points, Comp up 8, S&P up 4, Russell 2000 up $3.25, Google down $2.47, Apple off 50 cents, Microsoft down 11. We'll take a look at some of those charts. Intel up a nickel, Cisco up 11 pennies. Leading the market to the upside, you've got Synaptics, NYNA. They are up $5.83, up almost 18% here. Let's see, what do we have here? What do they have? Some earnings out. Let's see if Synaptics has the earnings. They did $11.1 million versus $17.8 million a year ago. That was their net income. Revenue, $143 million versus $145. So that is popping nicely. You also have Oshkosh, by gosh. OSK is the ticker symbol. They're up 14%, up $4.87. Let's see, they must be out with earnings as well. They did, let's see, where are their revenue numbers? They did earnings per share of 51 cents versus 43 cents a year ago. The revenue number not popping right here on my screen. KLA Tencor up 8% this morning, up $4 and change. Informatica INFA up $4 and change. Tempur-Pedic had a good night's sleep, up $3.50, unlike Select Comfort, SCSS. That is the leader in the clubhouse on the way down 16%. You've got Google, as I say, down about $3. C-Trip, CTRP, off $1.66. Hasbro, HAS is a ticker symbol there. They're off $1.50. Let's go take a look at some of these stocks here that are popping and dropping. Let's start with Procter & Gamble. Procter & Gamble out with earnings and having a very nice session, gapping up over a area of prior resistance, which was really set up by the top out there from October 25th out at the 70.83 level. That was a tested area back in December of 2012, and it is going to put this on a little bit longer-term chart out here to see what it is moving into. You can see it is also getting into the bought condition. But let's go take a look at this on a longer-term time frame. So let's look at this on the weekly chart that we have out here. You can see really popping, heading up to the swing point highs. Looks like Procter & Gamble wants to go all the way back and test, of course, 2007. That 2007 swing point, the low is 73.76. The high out there is 75.18. Volume is 57 million shares as it comes into that swing point. Let's see, this week here so far, this is through yesterday, 27 million shares, so it's going to need a nice day today. Let's go back to the daily chart and see how this thing has popped here in the early stages. Already 5.6 million shares in 7 minutes of time. So you've got Procter & Gamble. That will push the Dow up most certainly. Let's go take a look at some of the other charts out here. Give me a moment here. Let's take a look at Apple. As we know, Apple moving down with volume yesterday, big volume yesterday, getting into that oversold condition. Yesterday's volume coming out of it, 52 million shares. Broke that hammer candle on November 16th. That low was 505.75. We know it was tested and held just for a bit with the bullish engulfing candle on December 17th. But once this closed below it, which was really on the 14th of January out there, that was the signal that it was ready for lower prices. And where we know that this is going to head to, just the 1-to-1, A to B equals CD down, starting from the swing point from September 21st down to our hammer candle on November 16th, and back up where it did about a 0.382 retracement on December 3rd. 395 is the first stop to let some passengers off the train before it heads down to the 341.42 level. That was on Apple. Let's take a look at, I didn't mean to delete it. Let's go take a look at Select Comfort out here. Select Comfort gapping down this morning and gapping down with volume. So let's go see where Select Comfort is headed to. Let me see if I can find the news on Select Comfort out here. It says sales were up, but profits lagged the estimates out here. They did net income of $12.5 million versus $15.3 million. Revenues here, net sales $220 million versus $189. So they do have a cost or expense problem somewhere. Gapping down this morning. Going to head back to the last breakout session. So Select Comfort broke out on July 19th. Does it with 6.3 million shares. Let's see. So far today, in only 9 minutes of trading, down with 1.3 million shares. So it's going to be attacking that area. Looks like it's going to attack it with volume. Says that this wants to come down to the 22 level, trading at 22.91, more likely the 20.79 level, which is the low of July 18th. Now, let me pull this back a little bit further, because as long as it's going to come down there, what it's really going to come back to is this high volume gap down from June 6, 2012, 12 million shares down at about the 1964 level. Looks like that is where Select Comfort is headed again. Now let's go take a look at the Tempur-Pedic, who did get a good night's sleep out there, because Tempur-Pedic is popping to the upside. So did Tempur-Pedic take all of Select Comfort's sales out here? Let's see what Tempur-Pedic here generated. They had a net income of $23 million. Well, Tempur-Pedic, they must really be guiding well, because they did net income of $23 million versus $56, and sales of $341 versus $366 out here. Yet this is gapping up. So let's go see. This is moving into an area where it just broke down. where it most recently broke down. This is actually setting up for a possible short out here. If we take a look at Tempur-Pedic, this gap down with a big volume, huge volume. Take a look at the volume bar there. The session that it's trading back into is the June 5th level. The low there is 41.53. It's at 41.80 right now, so it's trying to close that window. The high is 43.88. The volume just on that bar is 2 million shares, but really your benchmark is that huge gap down with volume, which is the June 6th level, 41 million shares to the downside. So this thing here is setting up coming right into a resistance area. We'll see where this closes. If it closes back below the price of 41.53, that is really setting up a resistance level. Says that it should come back down. Can't bust it up. It'll bust them down and should come back to, I would say no reason for it to not come back, quite frankly, and to that high volume area in June, which is in the $21 level. That was on Tempur-Pedic. Let's go see what else it is that we've got out here already on my screen. How about Starbucks? Starbucks out with numbers, I believe, as well. Let me see here. Where is Starbucks? Starbucks up $2.40. It's up 4% out there. Let's see what they turned in here. Earnings per share were up 14%. Revenues, let's see. Net earnings, $432 million versus $382 from the year before. They did revenues of $3.8 billion selling coffee. You got to love it. $3.8 billion versus $3.44. So we take a look at the Starbucks gapping up this morning, doing it with some volume. Let's see, so far in just 12 minutes of trading here, up with 3 million shares. Let's go see what this is going to trade into. Looks like this here. Let's take a look at the ABCD patterns out here. See if this crossed the B point. And the A point that I'm using on this first A to B equals CD is going to be the lows of August the 2nd, all the way up to that TD Combo 13 count in bearish engulfing on September 14th, where it pulls back into the October 23rd level low at 44.27. We can see here on its way to the 1 to 1.618 level, that would be $58.76. At $58.76, going to come right into the area here where it most recently gapped down with volume. So it's very clear where Starbucks is headed to. It's headed to April 27, 2012, most likely to the 58.50 level. That has 27 million shares. That was a downdraft. If it can get up there on lighter volume and close back below it, and then you get a reversal signal, that would be that's setting up a possible short. Now, there are two signs of strength in here in Starbucks. The first one is November 2nd, and that's at a price point of $51.94. Your next area happens to be December 6th out there. That was up at the $53.85. So as you would be taking a look at setting up a trade on this, that really would be the area where you would expect to find some resistance, because you got two high volume bars in the same general vicinity. So I don't know if the reward to risk pays off, because your target on this, one of your targets should be about the 53.85 level, and should trade up to about the 58.77, more likely right up to 58.50 out there. So that is on Starbucks. Let's go see what else we have out here on these charts that we have. Microsoft. Microsoft out with numbers, but not really doing too much. If we take a look at Microsoft, it was trying to, and is going to try to get into its downdraft area, and that happens to be, had a nice downdraft, 131 million shares, popped to the downside on November 13th out there. The top of that gap is the November 12th candle, and that is going to be the low. When I say the top of the gap, because this was moving down, I'm looking at the low of November 12th out there, and that is at the price point of 28.21. Tried to get up there with good volume, had all the volume that it needed to bust it up yesterday, November 24th, had 101 million shares, but that 101 million shares still coming into 131, and really right now the resistance zone on this still in place, and that's the line that we would just simply draw across the November 23rd level out here. You can see how that held. It is Microsoft is trying to tackle that area again. This is not a stock to be shorting or, in my opinion, at this stage, going long either. If you go ahead and you pull Microsoft back, really just kind of trading in a horizontal sideways range, with the top of it being about 32 and the lows being about 24 out there. That is on Microsoft. Let's go back and let's look at the ETF indices out here. So let's go take a look at the Qs, see what the Qs are doing. Now, as we take a look at the Qs, we did get that abandoned baby top out there, and that was from the session from really began on the from January 22nd. From January 22nd to the 23rd, you have the Qs go ahead and gap up. Does it with a volume of about 31 million shares. So as it gaps up, really going against the downdraft of 75 million shares, did get up over that area, that window. Well, it was no window. That was just the downdraft. And then yesterday, gapping back down. Led by Apple, most certainly, but you do have an abandoned baby top. You've got a competing island reversal candle down here at the bottom. What the Qs did yesterday, moved down with 42 million shares. But that 42 million shares, folks, running into 75 million shares from January 2nd, that gap up area. That 70 million share, the low of January 2nd, is really key from a bearish standpoint. From a bullish standpoint, it is a very key number to be paying attention to. That is 66.48. That is an area that was tested on January 7th, on January 8th, on January 15th with lighter volume. Yesterday, even with the sell-off of could not get down and actually test that area. Was coming down with accelerated volume, certainly 42 million shares versus the 31 from the day before. But the benchmark is still the 70 million shares. Couldn't bust it down. Looks like what the Qs are going to do today, come back up and test the top of the range, the top of that range, again, being the October 19th candle out there, being that 67.27 level. The abandoned baby top still in place so long as the Qs do not get up and touch the 67.46 mark today. Let's go take a look at the other ETFs. Let's look at the diamonds, see what Lucy in the Sky is doing here. The diamonds trading out at 138.32, having a decent day yesterday, 6.2 million shares. We can see that what the diamonds did yesterday was they completed a 1-to-1 A to B equals CD. You can see also the diamonds getting into the overbought condition. However, yesterday's candle, not a reversal candle out there. We do not see a reversal candle until we see a reversal. Until we see a reversal candle, that's really what puts the odds on your side. That is what when the bulls and bears start communicating to you and to me that they're ready to take a respite, pull back, do a retracement. May only be a 0.618 retracement in the case of the diamonds. May just be coming back to that January 2nd level out there, as we saw in the Qs that have been held. But what is next on the horizon for the diamonds looks to me like 139.76 out there. If it can push up there, the diamonds will create that 1.272 butterfly pattern. That is the expansion of the September 14th high, which would really be the same as the expansion of the October 5th high inside the DIA, all the way down to the lows of November 16th out there. However, at any point in time, we could see that reversal candle, and that's what we're waiting for as a signal. So if you're long, stay long. Be careful, tighten up those stops, and look for those candle signals. Let's go take a look at the SPYs. Let's go see what the SPYs were doing. The SPYs having some nice accelerated volume yesterday as they move up into just the 1-to-1 A to B equals CD. The SPYs here yesterday doing 146 million shares. 146 million yesterday, 169 million on September 14th. But what we do know about the SPYs at that 169 million level, as the SPYs were moving up into it and over on January 18th, had the same volume up there. So it supports the SPYs being able to move up, and most likely at 150.40 completes a 1-to-1 A to B equals CD. And just a tad higher, 151.76 on the SPYs. That would set up your 1.272 butterfly expansion. We can see the SPYs most certainly in overbought territory, and if this was truly a bull market out here, that wouldn't necessarily be so bad. What we would see is really just this condition work its way off by moving sideways out there. Now let's go finish this off by taking a look at none other than the Russell 2000. We're going to take a look at the IWM. This has been the rocket ship. Still no bearish candles out here. This did a TD combo 13 count on January 17th. Up above it says that this still has substantial momentum. What the IWM has done and where it is stalling is at 89.91. It's gotten up today to 89.76. Yesterday got up to the high of 89.85. Up there, that's the 1.272 expansion. Looks like 90.66 though on the horizon for the small caps. Dow's up 33. S&P is up 5. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow up 48 points, composite up 18, S&P's up 6, and jumping in first place here, dollar-wise on the way up. Priceline up $13 and change. That's up 2%. Netflix having another strong day, up $8.50. Headed to the moon, you've got Bright Horizon BFAM up 27%. 27%. What is behind that? Maybe a buyout or something, or? Let's see here. Bright Horizon has begun with an IPO alert. Okay. And let's go take a look at bonds here. Let's take a look at some bonds and metals here before we close out the show. You know, it is Fridays, and then Fridays here at TFNN, as it is really every day, but more especially on Fridays. It's all about your health and wealth. That means our man Nico DeHaan coming on at 12 o'clock. That follows the Money Master. Well, today on Fridays, as you know, we do the Nadex Bull Bear Binary Option Hour. So that's the show following us. And then we go to Basil Chapman, and then it is off to Nico DeHaan. But let's take a look at bonds here. Bonds struggling this morning. Bonds testing out the lows here, going back to September 17th, out at the 144.15 level out there, 512,000 contracts down there. It's also testing the most recent lows out here of January 4th. So bonds will be giving us a glimmer, a piece of information depending on how they close today. Bonds moving now into the January 4th swing point low. That's got 427,000 contracts. Bonds will need to pick up the volume so far today. Thus far, generating 212,000 contracts. What we can see here as I blow up the bonds, you can see the 30-year Treasury that we're looking at. You can see how this gap down is acting as a very, very strong resistance area, and that's the gap down from January 2nd. So, don't mean to sound like a broken record out there, but January 2nd is a key day for us to benchmark, whether it's bonds, whether it was the Qs that we were looking at, whether it is stocks. You want to see how stocks were behaving as well. So that is on your 30-year Treasury. This is I like this because this is a beautiful chart. This here shows you what bonds were doing as it was getting down towards the relative weakness, meaning at the 30% level, as well as when it's up towards the highs, up towards the 70% level on bonds. The real area of resistance on bonds, if they can ever pop back up there, is going to be that horizontal black line that you see growing across the screen right in the 152 and change area. If we go take a look at, let's go take a look at natural gas out here, see what nat gas is doing. You may recall, if you were listening in a couple of days ago, when Dave from Clearwater called in and was asking questions about the doji candle. And we had a doji candle come in on January 22nd. One of the things that we looked at was the nice move that natural gas had coming off of the highs from November 23rd, where it made a low coming in on January 2nd. It broke outside the rising price channel. What it did when Dave called in on January 22nd, made a doji candle. At that stage, it was telling us, and it was making that doji candle at that point 618 retracement. It was telling us that it was tired. Well, it got doubly tired if you were listening on yesterday's session, because the prior day on January 23rd there was another doji out there. And what I suggested is this was setting up to pull back to test the bottom of the rising price channel. Well, I'll blow this up on the screen. If you're not following us on Tiger TV, go catch the archive of this show on Channel 9 out there. And that way you allow me to teach you something just simply from a charting pattern. And so what natural gas has done, it's come down. You can see it's really tested the bottom of that rising price channel. Not giving any kind of bullish signal here. The retracement that it has done is only, let's see, if we go from the low here of January 2nd up to the high, that doji on January 22nd, only a 0.382 retracement. If this rising price channel here holds, only doing a 0.382 retracement says a strong trend is underway. That strong trend, if we go ahead and we pull this back out here and I shorten it down, most likely means it would do a 1 to 1.272 A to B equals CD. Time flies fast here, folks. Stay tuned. Daryl Martin and myself will be up for the Bull Bear Binary Option Hour. Then it's Basil Chapman, Nico DeHaan, Daryl Martin again, David White, Ken Shreve, and the Tom O'Brien Show from 4 to 6. If you're off to start your day, have a fantastic weekend. I look forward to seeing you on Monday. Take care, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.